And welcome back. Thanks for keeping it KTN Business today. My name is Abi Agina. You can tweet us at KTN Business, at KTN News, or my Twitter handle at Agina Abi. And we want to get into that interesting conversation around investments. And we're joined by the CEO of Apollo Asset Management, Fred Mburu. Welcome to our studios.
Thank you, Abi. It's a pleasure to be here.
Good to have you. Of course, Apollo is one of the companies that has been driving the agenda when it comes to investments. Perhaps take us through some of the key products that people can consider when it comes to investing.
Okay. Thank you, Abi. Again, it's a pleasure to be here. I think first, just to explain who Apollo Asset Management is, we are part of Apollo Investment Group.
Yeah.
I think the bigger brand that is known is APA. We've got APA Insurance, we've got APA Life. So we are another arm within the Apollo Group, which is Apollo Asset Management.
Yeah.
And really who we are is that we are a mid-size investment house that understand investments, that understands all facets around wealth management. So we are wealth managers, we are mid-size investment house.
Good stuff. I know you're managing close to about 15 billion, if I'm not wrong.
True, yes. We've got assets under management close to 15 billion Kenya shillings. Again, given the fact that we are probably just 5-6 years old in our business, we think that is an achievement, but we are looking to more ambitious targets around that particular number.
And Mburu, if you're to walk us through, I know one of the key products you do offer are unit trusts. Perhaps just break it down for us. What is a unit trust and how can that ordinary mwananchi take part in this particular investment vehicle?
Okay, in terms of unit trust, yes, we have just early this month received the license from Capital Markets Authority to launch our retail product. It's the first time we are coming to the market with a retail investment product. So we have launched the Apollo Unit Trust Scheme. With that comes several options. We will have a variety of options for prospective investors. I think just to briefly describe what a unit trust is, it is a pool of investments. You know, we pool several like-minded investors into a single vehicle. The vehicle itself invests in a diverse number of assets and securities, so that every investor within that particular vehicle has got an equal and proportionate share depending on how much they put in of the underlying securities that the vehicle itself has invested in. So it is a pool vehicle. I think the analogy here, perhaps the best analogy I can think of is a cake, Abi. So when you bake a cake, when you put all the ingredients within that cake, your flour, your sugar, your eggs, and you take a slice of that cake, what you get out of that slice is an equal proportion of every ingredient that you have put in baking the cake. So in many ways, a unit trust is a pool investment that has got several underlying assets in it.
And if you look at some of the best asset classes that a majority of Kenyans traditionally have invested in over the years, real estate seems to dominate the list. Are there other asset classes that perhaps people can take up that are being offered by Apollo?
Yeah, well, traditionally, yes, you are correct. Kenyans have got an affinity, and I think rightly so, for real estate. I think what we are offering as Apollo Asset Management is an alternative. So we have financial instruments, products, which are the unit trusts, which will offer investors that opportunity to participate, for example, in the stock market. So we will have an equity fund that will invest predominantly in the stock market. We will have a money market fund for those who are risk averse, investing in assets that bear an interest rate. And then we do have what we are calling a halfway house between the two products, which is a balance fund. So that's the first phase of our unit trust product offering. Later in the year, we will be coming with other products for more sophisticated end investors, and I think the public should look out for this.
Interesting that you've brought in the aspect of the public. Of course, a number of companies like the one we're talking of, Apollo, it has been a big challenge to crack that market of unit trusts. What's behind this?
I think it's about education in some respects. I think it's about information out there. The public probably not having full access to information about where they can invest. I think it's also accessibility in terms of thresholds for investment. So what we are doing at Apollo is to make our product available. We'll be using several platforms to make this available. We will be offering a variety of products to suit different kinds of clients, and we will give them performance. So what we'll be selling is performance, service, and accessibility. Mm-hmm. So we think that will make the difference in terms of the penetration levels for investments and savings in this country.
Interesting. Muru, I know you've been in the industry for a while now.
Sure.
And if you're to look at it critically, aside from education from the point of consumers, what are some of the other aspects that sort of hold back people from taking part in unit trusts, and how do you plan to tackle this?
It's, in my mind, it's about also accessibility and affordability.
Mm-hmm.
The Apollo unit trusts will have a fairly low entry level, so people will come in with a fairly small amount of money.
Around how much?
Our minimum entry will be 10,000 Kenya shillings.
Mm-hmm.
There's also the ability to then top up into the unit trust products at about 5,000 shillings. And this is not a contract for you to continue paying in. So there is a lot of flexibility about when you can top up, when you can withdraw. Again, we offer the flexibility that if you choose to take back your money, then you do have the opportunity to then sell back your units, and we are obliged to buy them back. So it's about accessibility and affordability of these products.
Interesting, accessibility and affordability. Take a case in point. For example, if today myself, Abi, wants to buy a unit trust, what's the procedure?
We are bound by regulations in terms of know your client. We have to follow what the regulations say, but we've also simplified the process in the sense that you will get a financial advisor from Apollo Group, and all you need is simply to fill in a form, an application form, and pay your subscription to the fund. And it's just as simple as that. As long as the criteria for your ID, your utility bills are met, then we will make it as painless as possible.
And what are some of the benefits of investing in unit trusts for the ordinary mwananchi?
I think key among these, I'll probably just talk about 2 or 3 of them. I think key among these is the fact that you're getting a professional manager to look after your investments. So at Apollo Asset Management, all we know is about investing. We've got our pulse on the market. We are full-time in the market, so we know when to make moves in the market. So you do get that professional benefit that your fund is being managed by people who know what they are doing. Additional to that is the fact that by investing in a unit trust, in the Apollo unit trust, you get diversification. Because we've got scale, we will be able to diversify across sectors, across various securities, and therefore manage your risk. So you do not have the concentration risk that if, for example, one particular company or one particular investment does not do well, that all your money is all lost and sunk in. We do have the safeguards around that in terms of spreading that risk in order to minimize your risk and also to optimize your return.
And I'd like to get your thoughts as well on money market funds, but hold your thoughts. We're told that there's a developing story around the Monetary Policy Committee. Well, the Central Bank's Monetary Policy Committee is meeting this afternoon to review the country's monetary policy for the first time this year. Analysts project that the Monetary Policy Committee will leave the benchmark lending rate unchanged at 11.5%, owing to the resilience of the shilling, which has remained steady on the back of the much-awaited US Fed rate hike, rising foreign exchange reserves, and stable interbank rates. Last November, the MPC voted to retain the benchmark lending rate at 11.5%, signaling to commercial banks to lower lending rates. But key concerns for the MPC will be the headline inflation, which accelerated from 7.3% to 8.01% in December. This is above CBK's preferred target of 2.5% and 7.5%. Of course, that story coming through regarding the MPC is currently underway, where we expect the CBK Governor, Dr. Patrick Njoroge, to give us an update.
Interest rates should be cut gradually over time, and these look at our forecasts out to the end of 2017, where I think we see a return to something like an 8.5% policy rate. That should provide a boost to private sector credit growth, but again, one of the key assumptions underlining that inflation forecast is that we do not see excessive exchange rate volatility. If we were to see that kind of exchange rate volatility, either because of a further deterioration in external risk conditions or because of concerns about what might be happening in Kenya, then it's very unlikely that we will see the policy easing emerging as we currently forecast. So there are risks to this assumption.
And that's Razia Khan, the chief economist with Standard Chartered Bank. We now want to move on to another story around interest paid on Kenya's domestic debt. Rose 8% in the first quarter of the 2015-2016 compared to a similar period in the previous year, reflecting the effect of higher interest rates on treasury bonds and bills and enhanced borrowing. According to data from the Central Bank of Kenya, cumulative interest and other charges on domestic debt for the first quarter one amounted to 37.4 billion compared to 34.7 billion during a similar period of the fiscal year in 2015-2014. As a result, domestic debt stock comprising of government securities, the overdraft at CBK and other debt has grown from 1.3 trillion as at the end of September 2015 to 1.53 trillion currently. The increase shows the impact of the doubling of the monetary policy.
Infrastructure on growth prospects over time, and probably on export prospects too. External vulnerability, we know that the twin deficits are there, and given what we have seen with the widening of spreads on Kenya's Eurobond, it looks as though the market needs reassurance on these twin deficits. They will be looking very carefully at fiscal announcements, the supplementary budget, the budget that's presented in June for the next fiscal year, to see evidence that there is a concrete plan behind fiscal consolidation. And finally, on debt sustainability, we should not forget that Kenya is one of the more fortunate countries. It does have this depth and liquidity to its domestic.
I want to.
It's not in the same situation as other sub-Saharan African sovereigns that have to borrow externally because they have no other alternatives to financing. That is a good thing. But at the same time, there has been a rise in external financing because it has been cheaper, because it has been required to finance a lot of what was happening with infrastructure. Investors will need reassurance that things are turning around in terms of the export performance for Kenya. The external debt metrics are particularly interesting because one of the consequences of the stronger dollar is that we've seen many exchange rates weakening against that stronger dollar. When a country has a substantial amount of external debt, a dollar-denominated debt, the weakness of its own currency tends to inflate the value of that external debt relative to the domestic debt. And that means, unfortunately, that its credit worthiness can look a little bit worse.